All right. Good. Now we're rocking and rolling. I am live, but I gotta try and find how to get you guys on here now. So how do we get you on here? Where is the actual stream going to be? Here it is. We do it here. Yes. Okay. Everyone go here, please. And maybe this will work. So I'm talking to at least one person now. Maybe this will work. Let me know if it works for you guys. I'm gonna wait. I'll be waiting. There's 5 people. Nice. There's 5 people, so it must be working. There we go, guys. I think we can get a few people on here. I'm gonna wait just a little bit. Sorry for the inconvenience. Frustrating, but what are you gonna do? And I'm gonna wait here. Next time, I'll be able to get this encoder loaded on my end ahead of time so that we're not waiting until sort of the last minute. 10 people now. Good. All right, boys. There we go. Now we got people here. Thank you guys so much. Thank you, thank you, thank you. Woohoo. All right. Okay, we are live. Awesome. All right, let me just tell the other people. Okay, so this is working. And then I'll start going back. Okay, so this stream is working. See you there. All right. Cool. So we got about 18. That's pretty much everybody that was over there. All right. Thank you so much, guys, for bearing with me. Everybody can hear me okay, I'm assuming. I'm going to ask, send this out to other people. And okay, good. We are golden. We are golden. All right, I'm fired up, guys. This is the good part now, because if I'm doing this here, there's a few things. First, I got this stupid thing in my ear that I could take out. I don't know if you guys have ever messed around with these video things, but you get there's something that you kind of hold in your ear that's super annoying so that you can hear, the studio say their thing to you. And it gets a little bit annoying. All right, so I'm going to close out a lot of this. Guys, you're going to have to give me a second now because I got to get the rest of this up. All my zaxiness. We got to get all the zaxiness up. You guys have this is a sneak peek into my actual desktop here, boys, which is kind of cool. Because now I can tell you, remember when I was telling everybody about this, this secret info that I get, right? It's not exactly secret info, but what it is I get things from Zax. We have proprietary database software here, and it's awesome, right? I get all sorts of stuff. Can you guys hear me? I guess I want to ask, can you guys hear me? Because I'm not sure if the audio is working, and we don't have anybody right now checking on me to figure it out. No, Trevor, that's not my car. I don't have the Z06. That's a Z06 in blue. I have the base model in white. But I do have a Corvette. It's pretty cool. See if I got a picture. Maybe I'll find a picture for you guys. I swear I got a picture somewhere. Anyway, all right, so we're rocking and rolling. Let's start talking about Carmax. These are the things that I could see, guys, that you can't. The video's a little blurry, huh? That should straighten out in a little bit once we're rocking and rolling. Okay, so a couple of things I want to show you guys that you don't get to see all the time. So this is my consolidated surprise, is what it's called. So I can see here the earnings surprise for Carmax. I can see when the report was, and then how much the stock moved. This is 2 days before the report to 2 days after the report, right? So this is pretty cool. I like this because I get both the earnings surprise and also the sales or the revenue surprise. So in the case of Carmax here, we could see they've had some positive surprises and some negative surprises. Negative, negative. Here's a positive earnings, negative still, negative earnings, negative still, positive earnings, negative still. And then you wonder on this positive earnings, how does it go down? And then you see, oh, okay, they disappointed on revenue, disappointed here. One of the things I like to tell people, and actually I learned this from Brian Bolin, is that I can't believe I'm giving Bolin props. Don't let it get to his head. It'll swell even bigger than it already is, if that's humanly possible. But revenue matters more than EPS. I mean, it really does. People look at these revenue numbers because you can't fake revenue, right? But you could fake EPS all day. You can cook the books. You could do all sorts of financial engineering in order to make that happen for you. All right, so that's what we're looking at. So the moves, 5%, 2.5%, -8, -4, -8, -5. So there haven't been a lot of huge moves here, right? So then when we're looking at this, it'll probably won't have a huge move either. So here's another thing too, the Zacks rank, folks. So this is a cool little chart that you guys don't get to see. Down here is a histogram of the Zacks rankiness, right? So if it's all the way up here, this is when it's a strong buy. Here's a buy, here's a hold. This is very interesting when you're trying to visualize these things. I know you guys, you see these flip a little bit and it may not make a lot of sense when you're looking at these Zacks ranks. But in the grand scheme of things, when you see that a positive Zacks rank kind of occurs while a stock is going up, as the stock started to come down, that's when the Zacks rank came off, right? I'm not going to say it's 100% predictive, but it gives you a decent idea. And this is because those earnings estimates tend to track along with, with the Zacks rank, right? So that's why you get this sort of situation that unfolds all the time. I'm pulling up the other charts here on my other browser so I could pull it over so we can talk about this, but this is just some cool kind of behind the scenes stuff that I wanted to show you guys. The other one that's fun to look at is this performance number. And my boss Shiraz showed me this one with the performance number. What you can do is you can compare the performance of Carmax to the rest of the industry, just the actual stock price. And you can see that it's not actually underperforming the industry by that much. Overall, the whole industry is down. This is the retail and wholesale auto. Well, they got the auto parts market. We know that they're not auto parts, right? We know that this is actually they sell cars, right? So I can change this to the kind of a more broad industry, and that'll give me kind of all of this auto business. Non-food retail, wholesale. Well, I mean, that's very broad. But anyway, underperformance, I guess, a little bit underperformance is the name of the game here for Carmax so far this year, right? So they've really been beating up. They've been beaten up here on Carmax, okay? So now let's go ahead, as always, and kick things off looking at Carmax and our EPS, price consensus and EPS surprise chart, right? So I'm going to go ahead and zoom in big on this. Everybody can see it. And as usual, guys, the black line represents the price, which corresponds to the right y-axis. The little green arrows are earnings beats. The red arrows are earnings misses. These multicolored lines represent what I like to call the evolution of our Zacks consensus estimates over time. And you'll see that Carmax had a steady history of increased earnings estimates here over the course of the last several years. And it's continued to do so, actually. I mean, they've been holding up relatively well. So this recent action here, this huge sell-off here, and was that warranted, really? With these estimates just kind of ticking down a little bit, you got this huge selling. You got big volume, too. And then now there's been a couple of, volatile sort of waves here in this, right? So why is that happening, and what do those waves really look like? I'm going to go ahead and pull up my other fave, which you guys know, freestockcharts.com. It looks like Pando's here helping me out with the price consensus EPS surprise chart. Thank you, Pando. I'm going to take off these pivot points because we don't need to talk about pivot points when we're looking at this. Sorry, obviously I was trading a little bit earlier. I actually caught, I don't know if anybody trades oil, but I caught 60 ticks on oil today. Closed out the trade while I had my feet in the sand. Oh, it was great. I was walking by the ocean, closed out a trade at lunch. That's the way to go, boys. All right, so Carmax. So let's look at this one. Sometimes you got to adjust. Let's go to a 3-day chart. So gross, these ads they put in the right. I mean, look at this guy. I don't want to see some guy's swollen feet. Jeez. All right. So anyway, some interesting stuff to point out here with Carmax. Couple of things right away. This nice little bullish trend that's been developing. This whole trend channel really that's developing here on Carmax, right? Another thing, you got to draw your fib retracements just to see what's been happening. And then this nice little seesaw action recently. So let's see on this smaller seesaw. Look at this. This is going to get weird, all right? Look at the lows in February to the highs in April. And the retrace down, in this case, to 76.4. But it had a little bit of support really at the 38.2. So that happened once, all right? Now we're going to do this again. And we're going to move to this next sort of hump. And look at what happened. Back to that 76. And then we're up again. Now let's go to the big hump, and what's happened? Right to the 38.2, or in this case, this is the 61.8. It's upside down. So let me put this the right side so you guys, so I don't sound like I'm like making stuff up here, right? The highs and the lows, right? So now this is pulled back 61.8%. You see that? From this high to this low. Boom, right there. Pretty incredible stuff. The next area of support is the 76.4% retracement level. Okay, these are just fib levels, guys. So down here, you got to be a big buyer here. 52.50s, big buyer at 52.50s, right? Because it's done it once, twice, 3 times a lady, my friends. Now, we've got an earnings report coming up, and this could be that proverbial line in the sand right now. Now, here's another thing I want to teach you about these fib retracements. They're also giving you targets. So let's look at this first move. And now I'm going to let's draw the fib extension here. So, well, we got to go upside down, right? All right, hang on. Let's do this again. Get it upside down. So put the top there. Okay, now we're good, right? Now let's go ahead and edit this. Change this number. Make this the 138.2. We'll make this one the 123.6. All right, so here it comes down here. That target should be right around here, the 123.6 or the 138.2, right? So you got a couple of different ones you can get to, that one or that one. Let's see how it worked out on this one now, on this next little hump. Came down here, and the target, oh man, actually this went even further. On that target, we can draw the 150. Maybe hit the 150. Boom, it did. It hit the 150s. So this has hit the 150 target, right, on the last time. So now the 150 target now here is way up in the 80s, right? Below basically $80. I mean, that's way out there, right? So you gotta pretty much think that this runs out of gas shy of that, because you do have the 52-week highs here. And this is, I'm just showing you guys potential to the upside, potential to the downside, just really what the technicals are saying, okay? We're not making any assumptions one way or the other on where we think the direction of this should be. We're purely just looking at it and going, okay, this is what the chart is saying right now, okay? All right, so that's the technical picture. Lots of this sort of chopping upwards in a little bit of a bullish trend here, right? So from a technical perspective, even though this is beat up, this is oversold. The commodity channel index is down at negative 149. That's way down there, right? So there's definite potential for upside here because it's oversold. Just looking at the chart. Okay, now let's look not at the price consensus EPS surprise, but at the detailed estimates page to see what these guys are talking about shares of Carmax. Zacks ranked number 4 sell right now. They're going to report before the market opens on the 6th. And in the bottom 15% of our Zacks industry rank, the worst performing sector of all the sectors that we're looking at, year over year revenue growth 7.15% for the current quarter. Next quarter looks like 8.6. Current year numbers, I think I could find that in my other software, but who cares? Next year number is 7.38. Okay. Now if we're looking at the actual EPS estimate growth, 7.16% year over year for the current quarter, 11.56 for next quarter, 8.35 for the current year, 7.9% for next year. If you look at the actual earnings here, we have one analyst that has decreased their earnings estimates over the last 30 days for the current quarter. One has increased for the current quarter. 3 have dropped next quarter's numbers, 1 and 1 for the current year. But look at next year, 5 to the downside for next year. So that's really where the softening is taking place, guys. People are coming out here and they think that it's going to get kind of bad here for shares of Carmax next year. What's the overall effect to the Zacks consensus estimate? Here's where you start to see why it's a 4 and how bad of a 4 is this really. 79 cents, 79 cents, stuck. 101 to 1. I mean, come on. 329 to 328 for the current year. 353 to 356 down to 354. That's not, these aren't like huge moves to the downside, right? There's not a ton of negativity in this. And if we look at the surprises, we see, you know, small surprise, small disappointment, small surprise, you know, not a whole lot going on, right? And again, I could pull up this chart with my Zacks rank and show you that, you know, flip to a buy right before a rally, flip to a buy, and then got flipped to the sell here. This is like earnings estimates falling off. That's what's happening recently. But again, guys, still have this sort of bullish channel, higher highs and higher lows happening here for Carmax, okay? You know what I'm going to try to do? I'm going to try to get this without having this blow up in my face, all right? So I'm hoping that this is going to log in for me and not crash. This is active tick. You know, it's just one of these charting platform things that you can have, okay? What I'm going to do is I'm going to open up just a new options chain for us. And hopefully this doesn't crash. This program crashes all the time, man, and it's really frustrating for me, obviously. All right, so here's real-time options on Carmax, guys. You're in for a little bit of a treat. We're looking real-time. I like looking real-time, but it does make for, you know, a little bit of a hairy situation sometimes for us because I'm in real-time and I've seen these things move, and then while I'm doing the math, sometimes it goes the other way. So I just wanted to show you that versus bar chart, okay? So I'm gonna pull up bar chart. Earlier today, I was really upset with bar chart because right here, it was like in the financial news right up front, and it had something about Kendall Jenner. And I'm like, what? Okay, they took it down, finally, good. Yeah, it had something, it was like Kendall Jenner, blah, 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 blah. I didn't even read the rest of it. I was just upset that bar chart was selling out and pulling Kendall Jenner. I mean, what? I don't care about Kendall Jenner when I'm looking at finance. Anyway, I digress. So back to the options chain here. So I wanted to give you some perspective. So these numbers are nice and big, and you see sort of the at the money is 315 by 330. And then if you look real time, the at the money is 3 by 330. So it's not that big of a difference, right? It's not that big of a difference. Because right now this isn't moving that much. Just wanted to give you guys some perspective. Show you how I look at some of these options chains. I also use E-Trade Pro, so I could have showed you that. So anyway, just letting you know. Sure, save the change to the workspace. I'll deal with that later. All right. So as always, let's go side by side. Let's look at the at-the-money calls, at-the-money puts, the 55s. Oh, I didn't download the special drawing pen yet, guys, because I didn't know I was going to be doing this from my computer today. But 3 by 330, that's 315 for the $55 call. 225 by 230, let's just call it 230 for the at-the-money put. So that's 545 divided by the $55 strike price. We're looking for a 9.9% move here in shares of Carmax. Back to this page that I was telling you before, our consolidated surprise page. It hasn't moved 9% in ever, right? Do you see a 9% move in this thing? Because I sure don't. So if it's not moving and it's not happening, then what the heck, why are we even trying to do it, right? Forget about it. So there's that. So I'm not 9% seems like an awful big move here. So maybe I'm fading this, right? Maybe I'm not believing the 9%. So what are we going to do? All right, so 540. So essentially, guys, this is looking for, let's call it, heck, it's moving now. So it's more than 60. So we're basically looking 60 to the upside. And if you notice, there's 28,000 contracts that have traded at the $60 call. That's a lot of beef. And you drop another 4 before it, below it, basically these 50 puts or the 52s. So that's sort of the bottom end of the range there, okay? All right, so first, let's put together a bullish trade, right? Now, I think the way to be bullish here is to sell into the bearishness, okay? So if we were to somehow, I need to get this drawing tool, guys. Remind me, somebody, Pando, remind me to get the drawing tool. So if I'm bullish on this, I'm looking to short this $55 put at the money put. That's fine if I'm bullish, because I just think the thing's going to go higher anyway. But I don't think that 5% is going to, or the 9.9, almost 10% is going to happen. I just think that's too much. That's why I'm comfortable looking at a credit. Yeah, thanks, Pando. I'm comfortable looking for a credit spread here. So if we sell this, we can get 225 for the $55 put. Let's do the math on a couple of these, okay? Here, let's change it from the side-by-side to the stacked view, actually, so we can make our lives easier. So we're right back here, selling the 55s. There's the midpoint. Now, what happens if we do the 52.50? Let's do the math on the 52.50 first. So we'd get 225 for selling the 55, subtract 120 for buying the 52.50, that's 105. The amount of money we're going to have at risk is the difference in the strike prices, which is $2.50, minus that 105, so that's 145 at risk. So in this case, we can make 72% on this trade in a few weeks. 72%. That's the important number to consider, guys, 72. So now let's price out the 55.50 spread. So in this case, still getting the 225 for selling that $55 put, but now when we're buying the 50, it's going to cost us 73 cents. So now we've got $1.52. That's our max gain. The amount of money we're going to have at risk is the difference in the strike prices, which is $5 minus the 152, which is what, 348? So divide 348, and now you're talking just 43% rate of return that you can get, right? Not worth it, in my opinion. In my opinion, if you're going to rip it, you're going to go ahead and do this 55, 52, 50. So the bullish call here is short the 55, 52, 50 put for a, what did I say? 105 net credit, okay? Short 55, 52, 50 put spread for a 105 net credit, okay? That's the bull case. Now, what's the bearish case? And again, well, on this, remind me to go back and talk about that bull case in a little bit. But here, now the bearish case is to sell an out-of-the-money call spread, right? Or an at-the-money call spread. So selling these 55s, because there's plenty of juice, and then this sort of magnetic location. Kurt, these are April 21st expiration. Sorry about that, guys. April 21st. April 21st expiration. Let me go ahead and put this in the chat that the bull trade short the 55, 52, 50 April 21st put spread for 105 net credit. All right, that's the bull trade. Now the bears. Sell these. You got to sell at the money. You're expecting it to go down, right? So you'd be comfortable selling the 55s. And I bet you we've got the same sort of scenario here. But let's do the calculator on both of these anyway, okay? So $315 is what I'm going to get for selling the $55 call. Buying the $57.50 put is going to cost me $1.95. So that means I'm going to have $120. And the amount of risk I'm going to have is $130 because that's the difference in the strike price. It's almost 92% is what I can make on that trade. If I did the 55.60s, it's going to be $315 that I'm going to get for selling the $55 call. But it's going to cost me only $113 to buy that $60 call. So that's $202, but in this case, you're going to have $298 at risk, so only 67%. So what I'm saying is you got to be a little bit bold on this trade. So I would be short these 55s and buying just a 57.50. And that, again, is $315 minus $195. So the bear trade is short the 55, 57.50, April 21st call spread for 120 net credit. Okay? All right, so there's the bullish side, there's the bearish side. So, we're not going to have all the fancy, sound effects on here, guys, and I'm not going to make a bull sound or a bear sound here just in my, by myself. I could get a little soundboard for next time. We can make this a lot better, the production value. But I thought it was just important to show you guys a little screen sharing and talk to you. Just get this thing running because you guys are so patient. Thank you, for hanging out. So I apologize for the delays. Anyway, bullish side or bearish side, guys. Which one of these trades do I think is going to work out here? Guys, I think I'm going... No, Kurt, no, I'm not going to go Condor here. I'm going bullish. I'm going bullish. Yes, I'm going bullish. And this is why. This is a stock that's gone from 69 to 55 in 2 months. And I can't find in this data, in any data, I can't find why. Right? Why are we beating this stock up so much? Yes, maybe the estimates have come down a little bit, and we did see that. I guess we're not on Zacks, so let's get back on Zacks, right? I did see that. Bullish, even if they guide down. Well, they're guiding down after, right? You're talking about they've already guided, so this has already been priced in, a lot of this, right? I feel like a lot of this has been priced in. So look, we're talking about a little dip in the estimates for next year, a little dip here, right? Now, I read 2 earnings reports on these guys, one of them from Oppenheimer and one from Wedbush. Wedbush is neutral, basically. They said they're just getting out of the way, and Wedbush has been pretty good, and Oppenheimer's bullish on them. And this is the point that Oppenheimer brought up that I thought was interesting that I'd share with you guys. If we can how do I get this thing off? Anyway, that there is a ton of inventory that's coming from new cars that had been leased over the course of the last couple of years. And there's a ton of that inventory that's coming back. So that means huge supply in used cars coming out of the market. These guys are a big buyer of those used cars. So if those prices come down at the wholesale level on used cars, which they will as these cars are coming in off a lease, right? If you're coming in off lease, you're not selling it to the guy down the street. You are turning it back into the dealer. The dealer has a choice of whether or not they want to go ahead and make that happen, or they sell it to Carmax. They sell it to the wholesale guy, and that guy takes care of it, right? So yeah, the supply is going to be good for them in terms of their purchasability that they're going to be able to make, right? So they're going to be able to buy these cars much cheaper, and then they can hold, they can command whatever they want to command. They can price in their margins, right? There is a negative, though, and the negative is that where we are in the credit cycle, right? So now we're starting to tighten up on interest rates a little bit. It's going to be more expensive for you to buy a car, but that's going to make it more expensive for you to buy new cars. So it's going to make, and used cars, but it's going to make the used cars, I believe, more attractive because rates will start to tick on up. So then now the actual allure, like when those 0% deals are gone, are you going to still go out and want to buy that new car? Or will you settle for the car that's 3 years old that just came off a lease that you can get for significantly cheaper? So that's going to be the question. Carmax, I don't believe that Carmax does their own financing. I think they farm all of that out. Look at this, though. Does Carmax do their own financing? Here, I don't know the answer to that. I don't think that Carmax has an in-house. I think that they have other people that they use. Okay, so Carmax does have an auto finance. So they do finance some of their stuff. See, this is interesting. And then Capital One, Ally. These guys, if you've been hearing about the bubble in subprime auto, Ally is subprime, Capital One is subprime, okay? Subprime auto, right here. And you make a ton of money on the, they call it the secondaries, okay? Secondary financing, these car companies, they kill it on secondary financing. They make so much money on that. So anyway, I think that's what's happening here with Carmax. So right now, I'm a little bit bullish on them because of this, right? Because I think this could turn. I think they're a little bit oversold, and you can go to the upside. Lotto ticket time, right? We got to talk lotto tickets. I think this lotto ticket is pretty obvious, right? The 60s. Buying the 60s for 110. I think, or 113. I think that's the lotto ticket. Long the $60, April 21st, $60 call, I think is the lotto ticket. Because there's a ton of open interest there, right? So it's going to be a little bit of resistance. But look, there's also a ton of open interest all the way here at the 67.50. And if we go back to the charts, 60 is right here. This was Monday. The stock was at 60 on Monday, right? Short-term resistance level for sure, but if it breaks above that, this thing could be off to the races. Again, that's the lotto ticket. That is a very aggressive trade that should not work out, right? But for some reason, these have been working out for us, okay? All right, so first and foremost, I want to thank all you guys for having the patience and bearing with me here for a little bit. I kind of like the idea of doing it this way because I get the chance to chat with you guys live while we're doing it. My computer here goes a lot faster than going into the studio and back and forth, but we don't have the production value, but I can start to add some of that stuff to make it cooler, okay? So I'm going to work on that too because next week the studio guys are going to be out anyway, so we won't be able to use them. So we will be using this format, so I'm going to try to step it up a little bit. But I know that you guys don't come here for the bells and the whistles and the videos and stuffus and all that. You guys are here for the analysis. You're here to look at the charts. You're here to talk options and get ideas, okay? So let me put this one in here. Again, the lotto ticket. Lotto ticket is long $60 call, April 21st. For 115, let's call it. Okay? So, thank you guys so much for hanging out with me today here on Carmax. And yes, thank you guys for telling me that Carmax was your pick. This was overwhelmingly the most popular options chain or options I've ever done. Everybody was asking for it. So that was awesome, guys. Thanks so much for hanging out with me here today. Tomorrow, we're going to jam in. I don't remember who I said we're doing tomorrow. Who did we say we're doing tomorrow? Bed Bath & Beyond, right? So tomorrow we'll do Bed Bath & Beyond. I'm going to try and get that a little earlier in the day so we have a chance to trade it, but I would have to do that doing it on my own too, kind of like this. So I'm going to go back to the drawing wheel here, or the drawing board here, and the Iron Condor effect. I'll have to find that for you, Ed. So guys, thank you so much for hanging out with me here today, and tomorrow, I promise it's gonna be nice. It's gonna be nice. Tomorrow's gonna be free again tomorrow, for everybody, and we'll go from there. Okay, guys. So thank you so much, and I will see you all tomorrow. Have a good one.